Are you thinking about buying a new home, but you aren't sure where to start in the loan qualification process? Pre-approved, pre-qualified, pre-underwritten. Stay tuned. I'm going to make it all pretty clear to you so you can get clear to close on your new home.
Hi, I'm Ryan Nicholas with the Damon Sells Homes team at Coldwell Banker, and my team and I help home buyers navigate the complex Northern Virginia home buying market using our smart home buying strategy, a proven, repeatable system backed by market research and decades of experience, using little-known strategies and tactics to help you find the perfect house, buy it for the least amount of money, and avoid the common mistakes you might make that can cost you tens of thousands of dollars. Be sure to comment below if you have any questions about something you hear in the video today. I'll read and respond to every comment. And of course, please subscribe to my channel if you want to watch more videos to help give you an edge in the Northern Virginia real estate market.
Pre-qualified, pre-approved, pre-underwritten. What's the difference? And more importantly, which one is it the best to be when you're getting ready to make an offer on a house? What does a seller think about all of these? Well, let's start with pre-qualification. A lender can pre-qualify you by simply asking a few questions about your income, credit, assets, debt, and run some quick numbers on the spot. This may be a good place to start if you're just trying to get an idea of what kind of mortgage you might qualify for. They only go off what you tell them verbally, and they don't document anything or run your credit or ask for copies of your tax returns and pay stubs, etc. You can even get a lender to write you a letter saying you're pre-qualified to send in with your offer. However, most everybody knows that that letter is not worth the paper that it's printed on because no documentation has occurred. If I'm representing a seller on a listing, we would virtually never accept an offer from a buyer who is only pre-qualified. Pre-approved buyers comprise probably over 90% of the buyers that I see in the market today. This is the minimum status you want to get to before you seriously go look at houses and might potentially make an offer. To become pre-approved, you will have to provide more solid documentation from your lender or to your lender. This will include employment verification, tax returns, bank statements, and more, and the lender will run your credit. Your lender will have you fill out a formal loan application with the title company and run your application through their automated underwriting system. These automated underwriting systems will give the lender a good idea as to whether someone with your financial situation would be approved or would be likely to be approved for a mortgage using standard underwriting guidelines. It's not a sure thing, but it is a strong start to be able to say to a seller, hey, I'm pre-approved for the loan that I'm applying for. You should feel confident in accepting my offer. That usually is enough to get a seller to accept an offer from you, knowing that it may take days or even weeks for a potential buyer to actually go through the whole loan approval process. So being pre-approved is really the bare minimum that you need to get before you go look at houses. And depending on the lender that you work with, and how complicated your financial situation is, getting pre-approved could happen in less than a day, or it could potentially take several days or longer. I've seen it happen time and time again where a buyer goes and looks at a house and falls in love with it before ever getting pre-approved. And then they have to scramble to go get pre-approved from their lender before making an offer. In the meantime, that house may be scooped up by a buyer who was prepared and pre-approved ahead of time. This goes for whether you're a first-time home buyer or you're buying your 10th home. In fact, experienced home buyers are the ones who are more likely to just say, oh, I've been through this before. I know I can get the loan, won't be a problem, which may be true, but it may cause you to miss out on your dream house if your ducks aren't in a row. This just happened to a client of ours the other day who has a very complex financial situation with lots of streams of income and equity in multiple companies. It just wasn't an overnight process for him to get pre-approved. He couldn't get pre-approved even within a couple of days, and the house that he loved went under contract before he was able to get pre-approved. So I can't stress enough about how important it is to get pre-approved at the very beginning of your home search because you just never know. Now, I understand some people worry about how long a pre-approval is good for, which may be only 90 or 120 days. And if you don't buy a house in that time, you may need to redo your pre-approval and have them pull your credit again. There's a misconception out there that having your credit pulled multiple times for a mortgage inquiry will hurt your credit score, and that's just not the case. The credit bureaus expect home buyers to get multiple quotes and have their credit pulled multiple times while shopping for a home mortgage, so you will not get dinged for multiple inquiries. I've even had clients have their credit pulled 6 times in a week by 6 different lenders because they wanted to shop around, and that's okay. I believe there is some limit, like if you're having your credit pulled 10, 12 times, you may start to see an impact on your credit score, but don't be afraid to have your credit run early and then have to run it again some months later in the process. I'll tell you another story about why it's never too early to run your credit if you're planning on buying a home sometime soon. I had a client a few years ago who thought they had a perfect credit history and a great credit score. However, years before, they had a $200 unpaid bill that they didn't know about on their credit report. Fast forward years later, they get pre-approved just before buying a house. They discover this blight on their credit report, and it caused their score to be lower. Therefore, they didn't get as good of an interest rate as they could have. I share this story because it just goes to show you that one small item on your credit report from years ago that was not taken care of can cost you thousands of dollars in interest due to a higher interest rate. Now, I encourage everyone to at least check your credit report and possibly even get pre-approved, even if you're 6 months or a year out from when you want to buy. That way, if you find any credit issues that shouldn't be there or that are easily taken care of, it gives you time to address it, have your score come up, and then you can get the best possible rate. That brings us to the third level of mortgage qualification, which is being pre-underwritten and conditionally approved. You might be asking yourself, what? How can your loan be fully underwritten and approved before you've even found a house? Well, it's possible. And in this scenario, you work with your lender and you go through the entire loan underwriting process with them, which can be grueling and it can take days or weeks. But when you're done, your loan is fully approved with conditions. These conditions will be a satisfactory appraisal on the house you end up buying, satisfactory homeowner's insurance, review of HOA or condo documents if applicable, and a few other things. But the bottom line is your loan is approved. And if your loan is pre-underwritten like this, you can basically go to the seller and tell them, hey, I'm fully underwritten for my loan. I'm already approved. My offer is basically as good as cash. This takes a lot of uncertainty out of the process, not just for you, but for the seller too. And sellers are worried about whether or not their buyer's loan will be approved. So if you can take away that worry for them, that may be the tiebreaker between you and another competitive offer. They may even be able to accept less money knowing that your loan is a sure thing. With this option, just know going into it that it is a lot of extra upfront work for your lender to get your loan fully underwritten and approved. Not every lender does it, and they have no guarantee that you will ever actually buy a house with them. That being said, especially in a very competitive market, this could be a strategy that you can pursue if you're committed to your lender and committed to buying a house. I sold a house earlier this year where we generated 19 offers from 19 different buyers. 17 of those buyers were pre-approved, 1 was just pre-qualified, and 1 of them had their loan fully underwritten. Guess which one we accepted? Okay, that's it for this lesson today. And as you can tell, it's very important not only to have a great realtor on your side representing your best interest as your agent, but also to have an amazing lender in your corner. Their role is crucial, and your lender and realtor will work hand in hand to get you to the finish line. I know a couple really amazing, hardworking, honest local lenders that I'd love to recommend to you. If you need a referral, don't hesitate to reach out.
Thank you so much for watching this video. If you'd like to schedule a time to talk about buying a home in Northern Virginia, I've made it really easy for you. Just follow the instructions in the description below. And if you got value from this video, please like it, and I'd love it if you could share it with somebody else you know who might get value from it too. Also, be sure to subscribe to my channel and check out the other playlists for more great information on the Northern Virginia real estate market.